Well, hello everyone. K Kim here from the Traders Club, and thank you for tuning in. Apologize, I had to cancel last week's live midweek update, uh, but I still have planned to host live event next Wednesday right after market close. And so, again, I do run a local business here, and so sometimes with the meetings and things, I can get busy, and so then I do have to cancel. But as of today, I have open on that day, so I still have planned to do a live midweek update next Wednesday. So what we do is every other week we'll do these recorded video, static video midweek update, and then in between that we'll do a live session where you can come, you can hang out with me, and you can interact live, and I'll do a live session. Of course, even the live session will be recorded, and so I will send out those recordings once it's done. And so feel free to go ahead and sign up for that. It's at twotradersclub.com. Just look for 2015 or free webinar on one of the menu tabs. Free webinar, and you sign up once, you sign up for whole 2015, so you don't have to sign up again. And when you do, you will just give you a reminder email like hour before the meeting. So but that, again, that's every other Wednesday for live events. So well, today what we're going to do is going to look at the market indices, our usual Spider, Nasdaq, Russell, and we'll also look at we'll also look at Dow Jones and New York Stock Exchange. I think New York Stock Exchange might be the key index for what's happening. Actually, let's go to that first. Let's actually look at New York Stock Exchange first and see how things are looking right now. So, one of the things that I've been noticing a lot lately, at least last, several years, is that I start to see a lot of these, this kind of inverted head and shoulders. Many times these inverted head and shoulders are not meant to be, traditionally or historically, usually you see inverted head and shoulder after a downtrend. Usually you don't see that happening after an uptrend, right? Because that's what we call inverted head and shoulder reversal pattern, bullish reversal pattern. So many times what happens is we get a downtrend, and then we get an inverted head and shoulders, and then it reverses back up. But what I'm starting to see more and more, is that we would have uptrend, and then we will form inverted head and shoulders, and then we'll continue higher. So this is what I would call inverted head and shoulders continuation pattern. So something we've been watching on the New York Stock Exchange is that it has been cultivating lower highs. However, what is the definition of downtrend is lower lows and lower highs. It was definitely concerning when we did put in that lower low here, but once we got to put in that higher low at this level and held above that, right there you can see that buyers are really making sure that this thing, may at least they have a chance to bring it right back up. So this was an important level, because I think if the New York Stock Exchange would have kind of came down and then started cultivating lower lows and lower highs, I think then that would have been maybe some kind of a topping pattern here. And because we held above this level, and also looking at intermediate term, it also looks like we have a higher lows forming here. If I go to line chart, it's a little bit more vivid. You can see low, higher low, another higher low, and then once we got above these levels right here, that is considered as a higher high. So you can see we're in an uptrend. If we look at just that part of price there, you can see that low, higher low, and then higher high, and then we just formed new highs there, new all-time high, right? We're at all-time highs, right? We've never been any we are all-time highs there. So it's also interesting to note that this was all resistance kind of level. You can see all resistance becoming new support, and then we formed that wide scale of inverted head and shoulder. We had a similar story on the Russell. We'll talk about it in a little bit, but I think this is a huge victory from the buyers as we break above this level, this resistance level, and cultivated low, higher high today, right? Or I mean, this week and late last week, right? And with this is something you can work with, and this is, I think, huge, bullish signal at this point, because I think it was a New York Stock Exchange that gave a lot of investors kind of uneasiness and towards the market, with a lot of volatility we've seen last several months or so. I mean, really since like August 2004, really though, September, October, that kind of they gave a lot of investors spooked them a little bit. And then it started to really respect this level. And so, but once we gotten above that, I think once we gotten above this horizontal resistance right here, so that was where bulls were really finding their confidence. And once we break above this resistance level, this kind of a declining resistance level, I think this is where the buyers declare victory here. So I think, I don't always look at New York Stock Exchange, but I've been glancing at it here and there, and with the recent breakout, with the new all-time highs, I think that buyers are declaring victory. I think that maybe there might be still some minor term volatility, up and downs and stuff like that, but I think with this recent move, and also with all the indices, it pretty much being unanimous, right? They're condoning each other, they're endorsing each other, right? Looking at Spider, we got new highs there. We're looking at NASDAQ. You can see way up here, and looking at the Russell, similar story there, and also looking at the Dow Jones. Also, you can see that we're making new highs. So you can see we don't have any discrepancies between the indices. We don't have any mixed signals between the indices. We have none of that. We don't have any the divergence between the indices. All the indices are now confirming each other, now condoning each other, now endorsing each other. Now they're unanimous. What does that mean? It means buyers have declared victory, and I believe the market is going to continue higher to the upside until about maybe a minimum until early April to mid-April or something like that. I think many times there's a lot of shakeouts like that. This was a shakeout here, and this is shakeout. And once we get above certain level, this was back in late May, and then it got, you can see it until late July. So this was about 2 months of move before pretty sharp pullback, but still that was still in the vicinity of high low. So that was a pullback for high low. But this was about 2 months of move. And you can see we have another shakeout here, and then we got above the new highs right about here, which was early February. So I think that early March and April, that there's a good chance it will continue higher before some sizable pullback. So I mean, obviously as of today, we are above 10 EMA. This is a 10 EMA right here, that blue line. 10 EMA active support here, 10 EMA active support right there. So as long as we're continue to stay above 10 EMA, minor term is bullish. And one thing that I want to let you guys know, that the buyers have declared victory right about here when we closed above it right there. This was it. The reason being is that once we hit that resistance, this thing tanked, hit that resistance, rolled, and then we hit it, we got the red candle, we pulled back a little bit, we held, and we got up. And in doing so, we have created what? Low, higher low, and higher high. In the minor term, we're still in the minor term uptrend. If you've been following me in these videos, you've been coming into my live events and things like that, we talked about how as long as we stay above this level, we are still neutral to bullish in the intermediate term. Why? Because we're still in the territory of higher lows, right? And so because of that, as long as we stay above that, we still have to give benefit of the doubt to the buyers in the minor term, and we did have certain signals, certain insinuations, certain concerning factors, concerning signals, but we didn't have any of this substantiating with price action. That's the thing about it. I keep talking to you guys, is that price action is the king. And when the price action does not confirm any kind of breakdown, even though breakdown isn't enough, we talked about this, I've been harping on this last few months, is that even though initial confirmation is not enough, because we've seen that happening so many times, you get these breakdowns below the below the support area, and then they just go right back up. So even if we had a breakdown, I would have still not be shorting this market or overly bearish on it. And we talked about this last few months that because we are continue to see these kind of fake breakout to the downside, that even if we break a little bit below this support, I still wouldn't be bearish in the market because we're still in a primary term and intermediate term uptrend, right? But we didn't break down this time. We actually held this level. And so once we closed above this recent resistance and cultivated minor term higher low right here and stayed above, this was when the buyers declared victory, right? So that's when the buyers declared victory, and ever since then, you can see we did not see any kind of red candles. It's just all green candles. Well, you can say, well, okay, there's a doji there. That doji is gonna bring the whole thing down. You see, that's the problem, is that you like to always forecast things without legitimate data to back that up. I mean, we've seen a lot of dojis. This is a shooting star, and this was a doji. This was doji. This was doji, and these were doji, and they continue. We had doji here. I mean, they continue grind higher, and finally, until we got a mini double top here, neckline broken. When that double top was substantiated with the confirmation, then we broke down for about 4 days. That's it, and then we got back up here. So just because we have a doji here does not mean that it's gonna it's gonna roll over. And you know what, maybe it can, if we see, you can see some, if we can see some some evidence that that's what it's gonna do. But as of today, you can see what I talked about. 10 EMA did act as support here. 10 EMA did act as support here. So even if we pull back a little bit, I'll watch that 10 EMA. There's so many, there's so many support levels right now that this can be a support because this is an old resistance level, and 10 EMA can be support, that 20 EMA, and also 50 EMA. So really, with any pullbacks, any of those levels gonna act as support, which means when you put in higher high like this, you can see the high, higher high. It means if he pulls back, it has higher probability, very high probability that it could form, is pulling back to form a higher low, and before going higher, then we just got low, higher low, higher high, and then that's an uptrend. Right? So even though we might have a couple days pullback or slow down or whatever, I do believe that the market is going to continue higher at least till April, early to mid-April, and we might probably even get some kind of a minor term up and down movements. But I think as long as we're above 1020 EMA, I think benefit of doubt goes to buyers. As long as we're above 50 MA, benefit of doubt goes to buyers in the intermediate term. As long as we're above this level, again, that's still a territory of a higher low, right? This was a low. As long as we're above this level, about 199, 200-ish, still in territory, vicinity of a higher low, which means it can come, and then and again, if it even pulls back sharply at this level, and as of today, I don't think it will. We don't have any data to conclude that as of today, but if it does, we're still cultivating intermediate term uptrend here. So I think this market looks bullish. Let me go through these rather quickly here. Nasdaq, it's funny thing about Nasdaq is that we were cultivating lower highs, which was a concerning factor. But what is the definition of a downtrend? Definition of a downtrend is that we form lower lows and lower high. Do we have a lower lows? We don't have a lower lows. What we have is some kind of a triangle formation, right? And there's a lot of theories out there. If we have a declining triangle or descending triangle like this, that has higher probability of breaking higher, or some say there's higher probability of breaking lower. I mean, there's all kinds of theories out there. Here's my theory, and here's my thing. My thing is this: if we form these kind of triangle, it doesn't matter if it's a symmetrical triangle or descending triangle, ascending triangle, it doesn't matter what kind of triangle. If it forms in a primary term and intermediate term uptrend like this is a primary term uptrend, right? Primary term, intermediate term uptrend, then it has higher probability breaking to the upside. If it forms after a downtrend, you know, any kind of, you know, triangle, I believe it has a higher probability of breaking lower to continue in a trend. That's my theory, but really nobody, I don't think we can really put a set of rules just because it is, you know, a descending triangle that, well, we have a 65% chance it's going to break lower. I don't think that's a smart way to do. But again, this wasn't really not in a downtrend. This was actually more of a triangle formation. But the difference was that it's interesting. We hit this resistance. You know, we hit that resistance. We rolled over. We hit that resistance. Rolled over. We hit that. Rolled over. The difference when we got to the fourth time or third time right here, we didn't roll over. Instead, we had pulled back for 1 day, and then we established and cultivated that higher low. So you can see we had a minor term, low, higher low, higher low, and once we broken above that resistance, that was, you know, that was a minor term victory. And then we had that, you know, you can see that we had that horizontal resistance. So this is where we're watching here. And what I wanted to see is we close above, or at least we get above this above horizontal resistance, because we've already cleared the downtrend resistance, or, you know, that declining resistance. So I want to see if we can get above that. If we can get above that resistance right here. So once we got above that resistance, this was when buyers declare victory. This was when the buyer declared victory in the Nasdaq. And this was what we talked about here at the Traders Club, that, you know, with our members, we talked about, hey, this is where buyers are declaring victory. I forecast for the next 2 to 3 months that I think we're going to see a bullish run. We might even see move like this, where we just going to continue to grind higher for about, you know, for about 2 months or so. And this was when the buyers were able to defeat the bears. And this was actually, we actually enter call positions right about here, and then since then the move was pretty smooth. We do not see any kind of red candle, except today we are a little bit moving sideways here. But again, I would watch 10 EMA, because, you know, that kind of sideways move happen, you know, and does not mean that it must roll over. And a lot of times that it just watch, as long as it's above, we're up here, 10 EMA is down here. A lot of times it kind of wants to wait for 10 EMA to kind of get closer and then continue higher. So usually price can come down to 10 EMA, or 10 EMA goes to price as it start to move sideways or continue higher. So I mean, as of today, I can't say that you know, this is bearish. It's not bearish at all. Even if you get a little bit of short-term bearishness, I really would watch that 10 EMA, because 10 EMA did act as support. And if that 10 EMA does not hold, we still have a lot of support level that it needs to watch. As you can see here, we got 10 EMA, 20 EMA coinciding with this resistance, and we have another. So all these levels is going to act as, all these levels are going to act as support. And once we have a cultivated that higher high situation, which means we're on an uptrend. So when we pull back, it is pulling back not to completely roll over. Again, anything can happen on market. I mean, this is life, but I'm talking about probabilities here. When it pulls back, it has very high probability that it is pulling back not to roll over, but it is pulling back to create another higher low, so you can continue to cultivate higher lows and higher highs and continue being an uptrend. So I believe 10 EMA to watch on the Nasdaq. As long as it's above 10 EMA, I think benefit that goes to buyers. On the indices. Russell, similar. Something that we talked about is that it's interesting to note that, you know, we had this kind of wide scale of invert head and shoulder, similar to a New York Stock Exchange here, and then we got above that. You can see right there. See, a lot of people are so quick to call things. You know what I mean? A lot of people just start to just spit things out that they don't even know what they're trying to say. You know what I mean? Say, well, that's a bull trap. You know what I'm saying? See, that's not really a bull trap. What it is it is a higher high along with the higher low, which means as long as it stays above this level, this trend can continue. Well, this could have been invert head and shoulders. You can see that left shoulder, head, right shoulder. Again, that head and shoulder, we had a formation, but we don't have any confirmation. That formation needs to be substantiated with the price action, with the confirmation. We never got that. That needed to be gotten below 133. If we'd gotten 133, then that would have been potentially that head and shoulder. However, you know, So who's gonna win, right? We got this inverted head and shoulder, and we got this head and shoulder. So which one is gonna really play out, really? And I have to say this. I have to say, you know, even though we're shakedown here in this vicinity, I was still bullish in the market and on the Russell, and I written an article on the Russell. And I'm still holding my call position that, you know, that I entered back in 118 or so. But what we talked about is this: we do have a lower low here and lower high, right? And this is what we've been talking about on the videos. On the videos, and if you've been following me, you know, and watching my videos, is that this was a danger zone, because this was a cultivation of a possible inaugural, you know, downtrend, primary term downtrend. We're talking primary term downtrend inauguration here. You can see with the high, lower low. But once it got back up here and created equal highs, came back down, instead of coming all the way down, it came short. And when it got back up, something changed. What did it change? We're no longer cultivating lower highs and lower low. Instead, we have cultivated higher low, or higher high and higher low. And then what happened? And then we pulled back. We saw, you know, some shakedown, and then you know, obviously, you know, we can see this thing resolve into the upside, because again, it had a higher probability. I think if the bears wasn't gonna really bring this thing down, it would have been right here. This is where they had chance to do it. This was a major double top with the lower high. They should have, you know, continued cultivated lower low, lower high. They lost their chance, they lost their footing, and then buyers took advantage of that situation, brought it back up, created inverted head and shoulder, and the bears wanted to form head and shoulders. Well, they never, you know, able to confirm that, never have to substantiate that formation, and then what happened was pretty similar to what happened on Nasdaq. Once we got above these resistance level and cultivated minor term higher low and higher highs, right? This is where the buyers declare victory, right about here. Okay, we did have this kind of a wide scale head, inverted head and shoulder. We also had a minor term inverted head and shoulder. You can see left shoulder, head, right shoulder, inverted head and shoulder in the minor term. Again, terminology is not important, right? And formality is not important. What's important is the sentiment that it conveys, these patterns convey. That's important, right? So basically, you know, you can see that we had a minor term downtrend here, high, lower, low, that switched, flipped when we created higher low and higher high, higher low, higher high. You can see we got minor term uptrend, we got intermediate term uptrend, low, 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 high, 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 right? We got intermediate term uptrend. So understanding this is very, very important, right? If you can understand this, you know, you can able to understand the trend. You can able to where did I go? You can really able to understand where the market is going, and you can come up with the probability, so you can able to strategically place your trades and place your stop and place your targets and stuff like that, which is the most important part in trading, right? Most important part in trading, something I always say is, most important part in trading is understanding where to enter, where to place your stop, and where's your target, where's your level, what is the hold time, right? Where is a level to add? And when you get to target, how much positions are you going to close out? When you enter, how much percentage of your portfolio you're going to enter? And what kind of strike price you're going to use? What kind of expiration month? And if you're using options, I mean, that's the most important part in trading, yet nobody wants to talk about it. Everybody wants to share about stupid ideas and throw out different charts and argue about stupid stuff. I think that's stupid. I really think that's stupid. I really think that doesn't help nobody. I don't think, you know, the most important part you want to cultivate, you want to continue working your trading skills, is understanding minor, intermediate, and primary term trends, and also understanding your level of entry, your position size, your target, your hold time, your exit level, your targets, and when you get to your target, how much percentage are you gonna close out? Where's your level to add? All of that stuff, right? That's the most important part, and that's what I try to do, at least with my with my blog posts and stuff like that. I try to let you guys know that where's the level that I enter, where's the level that I close some, where's the enter that I close most, and we're gonna talk about that in Apple in a little bit here. But I try to do my best to trying to convey that to you guys so that you guys can see, and possibly it can help you in your trading skills. So that's the most important part, understanding that. And understanding the trend, understanding the chart patterns, understanding the confirmations, understanding the sentiment, that's a tool so that we can able to strategically find out what are the levels that we can trigger and engage and initiate, and where are the levels that we want to close our positions and stuff like that. So which is the most important part in trading. So Russell, obviously, we are at all-time high. We cleared this level here. I mean, bulls been declaring victory since about 118, 119, and now they're just, you know what I mean? And you could say whatever you want to say up here. All the bears, all the short sellers, all the put holders, they always got something to say. They just, I don't even know what else to say to them, but this is bullish chart. Obviously, anything can happen in the market, but as far as the probability is concerned, I have to say that the Russell actually does look very, very, very bullish to me. I think the Russell is going to have a great year. In my opinion, I think the Russell will have a much stronger year compared to other indices. I think the Nasdaq's been very, very strong. I think Nasdaq has been a leader last few weeks or so. But I think ultimately, though, going through the whole year, I think by end of 2015, I think it's the Russell is gonna outperform all other indices, and I think the Russell is gonna start to become a leader again. Because I mean, I remember back in 2012 all the way to 2014, Russell was a leader. Russell was the one leading the indices, and other indices following the Russell. And I think that that trend, that fashion is gonna happen again, and I think next few years, I think Russell is going to lead again. So I guess we'll have to see about that. Quickly, let me look at Dow Jones here. Dow Jones again. We made new highs. You can see we had downtrend resistance. Well, that has been demolished once we got above this neckline right here, and then we held above that. We did have a minor term uptrend right here with that higher low, higher high, and then we continue to cultivate higher low, higher. We're still in a minor term uptrend. We're in an intermediate term uptrend with the high, higher high there. We made new highs again. Again, as of today, looking at all these indices, they all look bullish. With the minor term benefit of Dow goes to buyers, intermediate term benefit of the Dow goes to buyers, and obviously primary term looking bullish. So I would have to say that I do think the market is gonna have its ups and downs in the minor term. It's gonna do what it's gonna do, but I think as long as we stay above 10 and 20 EMA, something like this, I think that this market could continue grind higher to the upside, at least about 2 months or so, until about April or mid-April. And any kind of pullbacks you might see that might be pulling back from intermediate term higher low, and then we could possibly continue higher. So we're in an uptrend. I do forecast that we're going to continue being in an uptrend next few months. For minor term sentiment, watch 10 and 20 MA, daily 10 and 20 MA, and see if they hold. As long as they hold, excuse me. As long as they hold, I think a buyer is going to continue to come, and I think this market is going to continue to illuminate a bullish environment, and I think equity is going to do very well here. So if you have any questions or any kind of feedback on these analysis on the indices, feel free to use my blog and leave any comments. I do not look at Twitter, stock tweets a lot, and I'm very rarely in stock tweets. I do look at Twitter a little bit more often than stock tweets, so my response might be a little bit much slower, but feel free to use my blog. I do get notifications on those. I turn off all my notification on my Twitter and stock tweets, so I don't get any notification, but I do get notifications on my blog comments, so if you feel free to do that. Anyway, so again, I think it's a huge success for the buyers when even New York Stock Exchange is also not condoning the indices. So it came out of this kind of mess and formed this inverted head and shoulder. Now we have a confirmation of that. I mean, could be a chance where it wants to come back down. I don't know when though. We might, if with more data, I might know when. But right as of today, I might not. I don't know when. But I mean, it could be, we could have like 2 more months of run and then come back, kind of, test these levels as old resistance, new support, and then gap back up, and that still would be intermediate and primary term uptrend. So that might happen, but I think there's a good chance that this market is just going to continue to grind higher and continue to frustrate the short sellers and the put holders there. Quickly, something that we've been doing, this kind of became our tradition now, looking at Apple and Tesla. So I'll keep that tradition. So we'll always look at Apple and Tesla. Tesla, I mean, again, I've been talking about this since we closed all of our positions up here. I didn't touch this at all, and I gave you guys warning signals part 1, 2, 3. Go to my Tesla articles that this is bearish. I mean, we could have certain moves in between. And if you can profit from that, getting short move here and there, but you know how volatile it was? It was a very difficult environment to trade. But with the lower highs and lower lows here, you can see we're still in a downtrend. So I really don't think right now is not the time. You could kind of say that, hey, okay, isn't this a higher low? Yeah, that's a good sign, but we really need to see a higher high, right? What is the definition of an uptrend? Higher lows and higher highs. So we really don't have any higher high. That's still a lot lower highs here. So we got lower highs, higher low. What is it going to go? Are we in some kind of a triangle formation? I don't know. Again, we talked about triangle formations. What did we just talked about on the NASDAQ? Triangle formation in a downtrend, it has a higher probability of breaking to the downside, okay? So what the buyers want to do, what I would like to see, I want to see price action, excuse me, getting above 230. Doesn't mean that I'm going to go long there. Once you get 230, it will get my attention, and I'll reanalyze this individual stock, and then I would see if I would even go long. But until then, as long as it's below 229, 230, I don't even want to initiate again, because I don't do anything short term. If you're day trading, obviously it doesn't matter. But also keep in mind that there's kind of a warning signal here. You can see that you got 200, 100 SMA death cross, and just because we have the death cross doesn't mean that that's gonna go to nothing. That doesn't mean at all. But keep in mind the last time when they had a golden cross right here, this is a golden cross to the upside, it moved pretty well to the upside. And last time when we had a death cross right here, things were a bit hectic, right? It didn't roll over though, but it moved sideways for about, you can see about 3 to 4 months here. But it was difficult environment to trade. But then once we start to cultivate higher low, things got a little bit better, didn't it? That's what I'm saying, is to stop looking at different things, or you're trying to just time the market looking at the fundamental data. Because yesterday I read a news where Tesla is one of the most valued car in America, right? With the luxury, with the power, with the money. Best money can buy is a Tesla right now. So that, because that fundamental, I mean, is this gonna just shoot up? I don't know, right? But we wouldn't know it until on the price action will tell us if that kind of report is gonna be important. But right now, despite of all the news, this can go even lower. This thing can go even lower. We've seen that kind of stuff happening a lot, even back in Apple 2012. There are all kinds of news coming out. That didn't matter. Apple kept tanking. So in my opinion, fundamental analysis does not work if you're gonna trade with the fundamental. The only way you can use fundamental analysis is find next Tesla, find next Apple, and hold for 10 years, then use fundamental analysis and do that. But you want to trade this, then use technicals, and you can still use fundamental analysis to confirm. You can use technical analysis to confirm what's happening in the news. I think that's a good way to put it. So I mean, if you can get about 230 and then hold above it for a few days, that will kind of get my attention. Doesn't mean that I'm gonna go long, but that will get my attention to possibly re-enter to the upside. But right now, this is definitely stay away. I'll close with this tonight. I I thought I would share some of these positions with you guys. We've been involved: Pfizer, Starbucks, Boston Scientific, LinkedIn, Toyota Motors since mid-December. So been doing so well with that. But I'm actually my throat is kind of hurting right now. I don't know why. And so I actually had another speaking engagement earlier about, and I spoke about an hour, and so it was not too long ago. So I think that's why. So my throat is hurting, so I cannot able to. I'm not gonna able to look at those names. Maybe I'll do them next Wednesday in a live event. You know, feel free to come to that, and then we'll talk about some of our holdings, and we'll talk about why we enter at the certain level, and talk about why, you know, why we have a target at that level, why we close some position at here, because there's a reason for certain things. And same thing with the why, you know, in Apple, I closed almost all of my positions up here. There's reason for that, right? I mean, you know, we first entered here with call positions, and then we added more right about here. And then we initially closed some positions up here. What was it? Yeah, right about here. And then we close I'm still holding marginal position on it, but we closed most of it at the top here. And I was not trying to call top or bottom or none of that. What I was trying to do was, I felt as though this was extended, very extended, which I tweeted out, which I posted my blog that I felt like this was very, very extended level. It's interesting. We know that this thing is not gonna go straight up, but most these fanatics and these fanboys, Apple fanboys, you know, when they go long up here, right, like 3 days ago, they wish that it's just going to continue higher. It's not going to do it. I mean, you know, as of today, I'm not sure if it's going to completely roll over. We're still at 10 EMA here. So I think, in my opinion, if you're looking at a more longer term, this isn't bad. I mean, this stock is going to go up, and it's going to do its thing. It's not going to go straight up. It's going to go up. It's going to pull back. It's going to go up. It's going to pull back. That's an uptrend, right? So you want to see an uptrend so you can continue to hold that for the next 3 to 5 months or so. And 10 EMA is definitely a level to watch, because 10 EMA back in February 9th, it did act as support here. So we're back at 10 EMA. Also, something that I was on my post update 3 days ago, I talked about that we're at that 161.8% resistance. That's what I was talking about. So I measured that move. We pulled back. We came, you came very, very, just right on the dot, actually, to 61.8% retracement. So this is 100% move. We retraced, pull back to 61.8%. Don't worry about these numbers. I set up this way so I can also have a retracement plus the expansion at the same graph. That's the reason why the numbers are a little bit messed up. But so we retraced 61.8%. And right under that, we acted support right here, and then we got up to 161.8%, and then we start pulling back, right? So 10 EMA to watch and 20 EMA to watch. There are a couple levels of support here. I'll just talk about those. And again, you know what? I'm not sure. I don't think I have enough data at this time to tell you that it's gonna come all the way to 118, or it's gonna come all the way to fill this gap and that gap, because that 2 days is very difficult to know, just because of 2 days of bearish candle that it's gonna just completely roll over. I do think if we see more weakness in the indices, especially on the NASDAQ, but if we see more weakness, I think we might see something similar to this. If we see something like that in the indices, I think we might see something like that. But if we don't see weakness in the indices, if the indices such like NASDAQ holds up and continue grinds higher, then I think we can find support some of these levels. Make sure to watch 10 EMA, see if we find support there. Otherwise, we got the gap fill area. This is a gap. A lot of times when gap is filled, it becomes support, and that's the level coinciding with the 20 EMA as well. If that level gets lost, next level of support is that gap fill, and if that level gets lost, next level is the old resistance, new support, which is coinciding with the 50 EMA. I think that's kind of the worst case scenario is about 118. I think the worst it will be about 117, 120. This is the vicinity that it could come down and I don't know if we're gonna get there though. As long as I think if the market continue to illuminate bullish environment, I think Apple's gonna manage. Apple gonna find a way to somehow gap back up or find support in some of these levels. That's the reason why in my post update I say this is not the level to short unless you're shorting for really quick, like flipping, day trading, that, but if you want to hold thing, I don't think it's gonna go any. I mean, there are a lot of support. We got 10 EMA, we got this gap fill with 20 EMA, we got this gap fill with that, and we got the whole resistance new support coinciding with the 15. So all these levels can act as support, and because we're in a bullish uptrend, things can change quickly. Like just one day, boom, bam, it just goes right back. I mean, that kind of stuff can happen. This is a reason why I don't recommend this is a level to short, but this is a level that I recommend to take some profits and be content with that. And and then if it pulls back much more lower, then maybe perhaps you can add at a good level. But yeah, I think I'm very comfortable with just sitting in with a very marginal position on Apple. The reason why I didn't completely close it out because I like to add some more once once we get to a certain level. I'm not sure at this point, but I don't know where I'm going to add at this point. Obviously, I'm not going to add here, but if you get a little bit further pullback, then I would like to add more because we're still in a primary term uptrend. And if it does pull back, it means that it has a high probability. It is pulling back to create what? Higher low. So then you can continue in an uptrend. So we'll continue to watch this. So that will be all for today. Again, I apologize, my sore throat. My sore is I just said my sore is throat. My throat is sore. I always see, in these comedy, chick flicks and stuff like that, they make that joke like my sorest throat or, stuff like that. And I thought they're stupid jokes, and I can't believe that I just said that. Like I just did that. I don't think I've ever done that. But I think because when I'm looking at stocks, when I'm looking at charts, my brain, it just seems like it's on like 9,000 RPM. It's just in that turbo mode, and then when I want to just talk about other than stocks, and then it like my brain speed and then what I want to say, they get mixed up. That's why I think I said that. Is interesting, but anyway, so yeah, next time we'll talk about those and see how they play out. But I don't think I don't recommend any of these to get into any new positions here. I mean, obviously just looking at Boston, I think we enter long there, and the earnings gap, you can see higher lows and higher highs looking very good. But I mean, do you really want to enter long here? I really don't think that's a level unless you're going to day trade anything. But a lot of these positions that we're holding has been doing very, very good. I mean, it worked out for us, and they're a bad season, they're a good season. Seems like it's been working well for us early this year, and it looks like I think looking at the indices and stuff like that, I think a lot of these as long as the market indices continue to illuminate bullish environment, a lot of these positions will do very, very well. I mean, obviously sooner or later we're gonna get that pullback, we're gonna get the shakeup, but down the road, maybe 2 months later. But I really think that 2015 we're gonna have another bullish year, and I think a lot of these stocks will do well, like such as Apple, Pfizer, Starbucks, Boston Scientific, LinkedIn, Toyota Motor, and other ones. But I have to say the market looks very bullish to me, and I think it's gonna continue early at least to summertime, and then there will be another like, oh my god, selling may go away, that kind of shenanigan. And so in the summertime there's some kind of shakeout probably, and then and because same thing happened right here. This wasn't really a summer, I guess, but kind of March to April area. So I think we might get some shake and bake, and maybe some kind of pullback or something like that. Maybe April, May. That's kind of what I'm looking. Then we might get something. And then I think, I mean, if again, I wouldn't know until I see some data. But if you ask me, hey, if you had to guess, what do you think? I think when I shake and bake, something like this, and then it's just gonna go right back up. That's what I think. It's gonna do that, and then just go right back up, and then it's gonna go all the way to like October, and then we get a little bit of shakeout, and then like December we're gonna have like the Santa rally, and then next year January we might have a little bit of shakedown again, and I think it's just that cycle, that vicious cycle is gonna continue at least throughout this year. So that's my forecast. I think market is very bullish. I think the market can continue to grind higher at this point for next few months or so, but in the minor term we may see some pullback or whatnot in the minor term, but I would recommend to watch daily 10 and 20 EMA. As long as it stays above daily 10 and 20 EMA on all these indices, Dow Jones, Nasdaq, Russell, and S&P 500, it is still considered bullish in the minor term. It will get there, we'll hit it. We might see a lot of these kind of looks where we get pullback, hit 20 EMA, 10 EMA, go back up, or some of these moves like here where hit that 20 EMA, go back up, hit it again, go back up for about a few months. I think we might even see something in that fashion. So I just thought I would keep you guys let you guys know about this. So next Wednesday we'll do live midweek update right after market close, and we'll talk more about some of our holdings, and we'll talk about why we enter, what are the levels that we're watching, and things like that. And hopefully, I can be more of a service to you in education, or learning more about trading there. So well, have a great night and enjoy your evening. If you have any questions, please feel free to use my blog to write any comments or any feedback. Any feedback will be appreciated. And so, all right, have a good night.